and welcome back everyone to our tactical portfolio update where we talk about everything market related, what's going on in our portfolio and everything that's going on in the economic world. We're also going to be talking about year-end taxes today, so make sure you stick around and catch those. There's a few things to take into account before the year end, before that December 31st mark rolls around on the tax front. With that, let's dive right into things that are going on in the market. So the market's continued to be a little bumpy as we go into year end. Not unexpected. We had a fairly bullish start to the market today, which is leveled off mostly around those lower CPI numbers. So the inflation numbers came out of the US a little bit lower than October and certainly lower than last year. Pretty much as expected, as we, the monetary policies has continued to slow the inflation. We've seen that on most products out there. We've seen the prices dropping, especially when it comes down to consumer goods. Even on the oil and gas front, the gas prices have come down. But the only area that still continues to stay high is food. But as we've talked about before, we're not really expecting too much relief when it comes to the food prices anytime soon, because a lot of that's not just driven by the inflation. Of course, there's a situation in Ukraine continues to go on there, which is affecting things, and the weather patterns have changed, and the drought in the US have, of course, put a lot of pressure when it comes to the crops. So that pretty much is going to continue to 2023. But we did see Canada raise their their interest rates by 0.5%, and pretty much indicated that they will be slowing or taking a pause perhaps here in Canada on the interest rates. We're still waiting to hear out of the US, but the expectation is that they will also take in a slightly easier stance on this hike and going forward. So pretty much things are playing out as we were expecting. Also in the US, the US dollar weakened a little bit today. It had been up a little bit late last week, earlier this week. Again, pretty much moving with the positivity of the market. As negativity comes into the market, it goes up, and positivity in the market drives the US dollar down. So still continue to see that move a little bit. Gold edged over the $1,800 an ounce. So good news there for those who've been following gold and looking for that to really start to pick up. It's been a theme, of course, during inflationary times. People look to gold for performance, and we really haven't seen it as of yet. On the energy front, on oil, our kind of outlook for oil continues. A little bit of weakness last week, but we've seen that start to pick back up again. Edged up just over 2% just this morning alone, mostly on the winter expectations, but also with the pipeline, the pipeline, like the Trans-Canada pipeline that has a leak and a bit of unknown because I haven't figured out the cause of it yet. So a little concern kind of floating around that. Other news coming out of the markets, really it's been driven just on that inflationary outlook. Of course, as I mentioned, we're starting to see some breaks there as the central banks start to ease a little bit on their outlook. We, of course, continue to have concerns around the China reopening, bringing the supply chain back into line. Of course, they had a zero COVID policy, which they eased up on, which will bring hopefully some relief to the different areas of the supply chain. One of those big areas is the microchip market. There's been a back and forth, not just with trying to get supply out of China, but of course the US putting a lot more rules around what can be imported and the sales around that. There is some pushback from China on that this week as they take the US to international court to push further support for their chips here in North America, versus opening new facilities here in North America to build locally made products. Other than that, we do continue to expect things to be a bit choppy for the year end. Nothing really market driven, just volumes falling off. December's traditionally a very slow month in the markets and the portfolios. We have gotten the position pretty much where we want to, except for some tax loss selling, which we'll get into more here in a moment. So don't look for too much movement in the markets for December. Early January, of course, we will make sure we position them. Likely to deploy some more cash. We're still heavy cash in the portfolios. We have seen a bit of easing off in the general market conditions. The portfolios have been performing great in December, but we have seen the general market ease off a little bit. So look for us to deploy some of that cash to get it working harder for us into 2023. We are expecting things to be a little bit more optimistic and a little bit more growth oriented in 2023 than we saw in 2022. Still hoping to finish the year off flat as far as the portfolios go, as we see different areas of the market continue to pick up. And as we talked about last time, the fixed income market is starting to show some signs of strength. We've seen some good movement in our fixed income positions in the portfolios, but more so, we haven't seen really any more decline in those fixed income positions. And the great thing about those is, the rates that they're paying us. Two of the four, fixed income positions we have in there right now paying over 9%. So, while they stay flat, we continue to collect the high rate of return, and still looking for those no bid markets to kind of turn around as we see that flattening of the monetary policies as we move forward. So that's pretty much on market updates is what we've seen this week, and really what we're looking for in the coming week is just that interest rate hike out of the United States, what that number is going to look like, and of course everyone's going to pour over the language from the U.S. Fed as to where they're taking things the new year. If things follow what we've seen in Canada, as I mentioned, we should see that lightening and softer stance moving forward. Pretty much the policies have been working. We've even seen on the real estate front. If you look at BC here locally, in November's numbers, the real estate 50% lower sales than previous years, and that's pretty much driven again by the higher interest rates. We haven't seen the prices fall that much. They actually have started to fall. And we're starting to see some sales, especially on the pre-sale market, where builders have pre-sold and they have limited inventories left, and they just want to finalize those sales so they can secure their financing. We've started to see some price drops on those across Canada. So do look into the new year to start to see some pressures on the real estate markets, especially as some of the floating rate mortgages start to reset, and also some of the fixed term mortgages, which will be coming up in the new year for reset as well. So people looking at higher mortgage rates, higher financing costs, and we'll probably see more inventory to the market. And of course, with low sales volumes, that might push the prices down a little bit lower. So with that, let's move on to kind of the tax front, some things to look at for year end. So we're pretty much wrapping up the tax year. Not too much to do, but there's still some time to get in a few strategies. One I'll mention, charitable giving. It is a good time of year to think about it. The food banks have certainly been stretched pretty much across the country as far as people in need with the higher cost of food. So charitable giving, you can still give up until December 31st. If you want to do a stock contribution, we've only got a few days left. And there's a big advantage to doing stock contributions. Basically, if you have a capital gain in the stock, the best example I can give you is if you're going to give, say, $10,000 to charity, but you have a stock that is up and is worth $10,000. If you sell that stock and contribute, of course, you got to pay capital gains, so you don't have $10,000 anymore. And then you give the balance to charity. So say $8,000 go to charity, depending on your capital gain. But if you donate the stock in kind, it can go completely, the whole full $10,000 can go in there. And the charity gets the $10,000, you pay no capital gain. You take the cash that you were going to, contribute to the charity and buy back your stock, basically wiping out any capital gains tax on your position, but still keeping the profits and keeping the position as well. So a really great strategy. I know there's not a ton of capital gains out there this year, but if you do have some, consider that. You've only got a couple of days left. We can facilitate that through our charitable foundation here. If you don't have your own foundation or an ability to do that for the charity that you're looking at, and we can pretty much direct that to any charity of your choice here in Canada. So reach out to us if you have any questions around that. Another strategy a lot of people don't think about. Let's say you have a position in your portfolio, maybe it's sat there for a few years and it's got a zero value, so it's gone defunct. You haven't claimed the capital loss on that if it's still on your statement. So you can actually go and zero value that position. And if you need help with that, again, reach out to us. Just go to mikeonmoney.com, email us, call us. Happy to help you with that. You can zero out the value and you have that capital loss. Now, when we talk about capital losses, it's really important to keep in mind as well that capital losses not only carry forward. So if you have future gains, you can offset those against a loss from the past. So they stay with you forever until you use those up. So a great tax planning strategy for future years and future gains. But you can also go back up to 3 years. So let's say in 2021, you had some really big capital gains. And you paid a bunch of taxes, excess taxes for capital gains. You could actually go back and refile for those years. You want to make sure it's worth it because you do have to refile. And most people will use an accountant, and there's extra fees and costs to doing that. So you make sure it's worthwhile for the tax savings to go back and refile for previous years. But that's something, again, reach out to us. Happy to discuss the amount, whether it's worth it. Or you should just hold on to them for the future, but worthwhile taking those losses. So that goes to tax loss selling. We have been doing in this portfolio. We've had a few positions that are still, currently underwater. Don't expect much movement over the next 30 days. So we've been harvesting some tax loss selling in the portfolio. So if you see some positions being just sold out and going to cash in your portfolio, don't worry, we're going to be buying those back, or very likely going to buy those back, assuming the conditions are still right. After the 30 days, you have to be out for 30 days. So we'll be buying those positions back and getting that money back working for you again right in the early part of the new year. But we lock in those losses. Again, your accountant can take those back if it makes sense, or carry them forward for future. Just remember that 30 days, the superficial loss rule has to apply. And of course, these are only in non-registered accounts. So RSPs and TFSAs and RIFs, you can't use those capital loss strategies. So with that, keep in mind, we are coming up to December 28th, the last day you can do the tax loss selling, because you have to settle before the year end, and it's a T+2 settlement. So make sure you get those trades in before that date. Registered accounts, of course, are RESPs. We're coming up to the deadline for this year's grant. You can catch up on grants if you're the educational funds, if you did not maximize this year, but you can only catch up on 1 year at a time. So there is some limitations there. So it's worthwhile looking at before December 31st. TFSAs, of course, come in January. We always like to get that money in there working for you as quick as possible, especially if we're going to see some stronger markets in January. So 2023, your TFSA limit has gone up to $6,500 from last year being $6,000. So if you have your TFSAs here with us, you'll definitely be hearing from us in January to top those up, but make sure you take advantage of that. And of course, our speed deadline is going to be March 1st this year in 2023. So you have lots of time for that. And the new limit is $29,200. But you can find your limit. You might have some carry forward room. Make sure you check out your limit on your tax assessment statements from last year, or if you're following this year, you take a look at that. And if you do have some carry forward, do come to us and talk about your RSP limits. RSPs are great tools, but they have to be used correctly, because you can fall into that, that media, the trap. The media always talks about the trap of, oh, I'm stuck with all this RSP money and I'm just paying a bunch of taxes on it, more taxes than I got deductions. Well, a little bit of planning, we can still maximize your tax deductions, but at the same time not get you into that trap. So if you have that, or if you've actually gotten yourself into that corner, reach out to us. There are some great strategies. We call them our riff meltdowns, where we can actually move the money out of their fairly tax efficiently. I don't want to say tax free because nothing's tax free, but very tax efficiently through some strategies that we can put in place to help you get that money flowing out. So if you have a large RSP and other income, especially in retirement, we can get that kind of get that organized. So with that, that's pretty much kind of our tax tips or tax things to consider for this year. As always, keep in mind everything we talk about here is for information purposes only. Always do your own diligence, or as I always say, contact us. We're happy to help you out. This might be our last broadcast for tactical update for December or for 2022. We will definitely be coming out in January with a look forward for the year. But in the meantime, as always, reach out to us, mikeonmoney.com, give us a call. If you want to book a consultation, I'm definitely around for the holidays. I'll be here if you have any questions, and we'll happily reach out and help you out. So with that, that's all we have for this week. Thanks, everyone. Take care and enjoy the season. Thank you.